And welcome to another daily dose of insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today is Wednesday already, but it's a very short week, at least here in Europe. We come out of a long Easter weekend, and so everybody's still a little bit relaxed from the weekend and hyped for a good week in container trading. Today, I have brought four core headlines. Let me just quickly share my screen so that you can follow more easily. We have four key themes here, one positive and three a little bit more negative if you look at the top line. Number one, we have just released our Exchange Global Forecaster, which the link I'll share in the show notes, which shows that the industry, so supply chain professionals, are increasingly bullish, meaning that they expect a better peak season this year. And as well, our exchange container sentiment index remains in positive territory after a relatively weak or negative March. And so April looks much brighter, at least for supply chain professionals. This is actually in stark contrast to two reports that we've just read from the World Trade Organization. I share the links in the show notes as well. The first one just released recently is a report about the world economy being at risk of splitting in two blocks, or at least two blocks. So you have the US-Europe block, and you have the China-Russia block, and industry participants sort of being increasingly required to choose between the two and choose for one of them, and then only trade with one block. That means, in effect, global trade will become more inefficient or less efficient because you have fewer trading partners that you can deal with. You have to refocus your supply chain. You recalibrate your supply chains, and in general, sort of your fleet utilization also becomes less efficient because you can't utilize it on a global way. So you have less triangulation of, for example, vessel capacity. The second report from the WTO as well coming in, looking at trade growth 2023, and also expecting a more sluggish year than even last year. So you see here growth rates of world trade in 2021 was 9.4%, 22 already only 2.7%, and 23 expected only 1.7%. That is an uptick compared to, I think, the December forecast of roughly 1%, but still sort of a very, very negative outlook here on the world trade growth situation by the WTO. And then as well, also a negative report by the IMF, sort of expecting or forecasting a hard landing of the world economy if global inflation persists at current levels, or central bankers at least cannot rein in on inflation faster. So the IMF notes that inflation especially contrary to earlier expectations, is much more sticky than expected. And so, yeah, the IMF sort of sees risks and dark clouds on the horizon here for the global economy. And as we all know, global economy has an impact on world trade growth. So that explains the link between point 3 and 4 here on that slide. That's it from me for today. Just a very, very short roundup. I'm off on Friday, so for me it's a very, very short week. So there's no daily dose of insights on Friday as well. But we'll see each other again next week on Monday, and then for the entire week. Until then, have a fantastic week in container trading, and enjoy the weekend when you get there. Take care and see you on Monday. Bye-bye.